Okay, so hi everyone, and thanks for joining us. Today we've got Sean Riley, the CEO of Halo. So I don't know if you guys have heard on the grapevine, but basically there is a couple of new products coming out. So Sean's going to talk to you guys about those. It's quite exciting. Just new guarantees and new protections on offer for you guys and the homeowners, and also just about guarantees and when they're compulsory. So we're all looking forward to that. So thank you for joining us, Sean. I'll just open up his presentation and then pass it on to Sean, who can do the, so in theory, sorry guys, you'll have to bear with me while I, okay. Oh yeah. Beginning. Okay, there we go. So can everyone see the presentation? Fab. Okay, so yeah, awesome. So Sean, did you want to come up here then?
Thank you for that. Thanks for the intro, and thanks to Martelli's for hosting these sessions. I hope everyone finds them very valuable. An hour of free legal time is always a good thing, very, very rare. But yeah, so as Karen talked about, going to give you a bit of an overview of deposit and non-completion cover, which is coming up. I'm going to talk about compulsory guarantees and what that means for NZCB members. So we'll start with that. So compulsory guarantee updates. So first of all, the rules. So all new builds and renovations over 100K must have what's called a home warranty, which includes guarantees and insurances. They must cover 12 months of materials and workmanship defects. Of course, the Halo guarantee covers 2 years there, and 10 years for structural defects, including weather tightness. It's going to be managed by the council, which means it'll work really well, provided the guarantee evidence is going to need to be provided with the consent or before the first inspection if the consent isn't in place at the time the guarantee is applied for. And there's going to be oversight and reporting to MBIE by us. Implementation, the legislation should be passed in September this year and then enforced by September next year. So essentially there's a year for everyone to get ready to become, to learn what that means for them and to make sure that they're able to provide a guarantee to their clients. So Halo and NZCB involvement, we've been heavily involved in, I guess, the development of the regulation, which has actually been pretty refreshing. Government normally just ferrets away by themselves and then they produce something that's just not workable for industry. But for once they've actually consulted and it's been really good. So first of all, when they first announced it, we actually believed they were going to do it themselves. That's what they talked about, that they were going to have a state-owned scheme. And we just thought, well, one bit of job security here, so I thought that's not great. But two, we just thought that, you know, the government being involved in anything and without being too critical, they tend to not do as good a job as what industry does. It's like when the government tries to build stuff, you know, they don't do as good a job as what you guys do. So we lobbied for the involvement of existing providers and they saw the light, and certainly that's going to be what's going to occur. Also, we're heavily involved in warranty versus insurance discussions. We firmly believe, again, a little bit of job protection, that a guarantee is a better product for builders than an insurance is. Maybe for clients it's similar, but in terms of builders, it's a better product. The reason being, insurance is a first response product. So if a client hasn't even spoken to you, lodges a claim with an insurance company, they'll just respond to the claim. If they approve it, they'll remediate it, then they'll come after you to repay them, which isn't really fair. Whereas we give you the opportunity to remediate it first, and therefore we don't have to come after you later, because often you'll get your sub-trade back and it won't cost you anything. So the insurance approach, we feel, yep, it's a valid product, but we don't feel it's that fair on builders. We also have been providing feedback to MBI on a range of topics, from the product detail to new entrant requirements. And pleasingly, as it's evolved, we can see that they've taken our feedback on board when they produce new material, which is pretty refreshing. So what does it mean for NZCB members? Well, the good news is, if you're an NZCB member, you're already part of an organisation that has a compliant guarantee. We've been advised that existing providers, being Masterbuild, ourselves, and Stanford, will be grandfathered, which essentially means there will be a compliant guarantee under the Act. And then other players will be allowed to come along and go through a process with MBIE to to provide guarantees. So it may be that we end up with more than 3 providers in New Zealand. It also means there'll be a lack of ability for what we'll call the marginal builders to complete new builds or large renovations. Essentially, if you can't be part of Masterbuild, NZCB, or Stanford, you will not be able to complete a new build, and you will not be able to complete a renovation over $100,000 as the main contractor. You can be part of it. You can be a builder subcontracting to the main contractor, but you will not be able to be the main contractor. As part of that, obviously, we believe that over the next year or two, there'll be a number of people seeking membership. So NZCB and Halo have agreed membership criteria, and we are not dropping our standards. The requirement to trade for 2 years, the requirement to be trade qualified for a minimum of 2 years is still there, and we're not going to drop that just to get a whole bunch of new members on board. It's important to both NZCB and to Halo that our membership quality remains where it is. And as I put there what it means for builders only priority guarantee, we've already covered that off. So the more exciting stuff for us, well, that is pretty exciting, to be honest. More exciting in the short term. Deposit and non-completion cover. I think one of the very first meetings I had with Andrew and Barbara and someone else, when I said to them, well, I had a magic wand, what would you want me to do? And they said, we want deposit protection. So it's only taken 2 months, 2 years, but we got there. So implementation for the product is on the 1st of May, which is this Friday. So we believe we're ready. We hope we're ready. And the reality is this is for builders that go into liquidation, or for clients of builders that go into liquidation. Because if a builder's still trading, the build should still get completed, and so there's no deposit or thing. If there's a contractual dispute and you part ways, the product doesn't pay out on that. Okay? This is solely for when builders unfortunately go into liquidation. So in terms of the product, essentially, and it's the same as the 10-year guarantee, it's a sales tool for you guys. Hey, I'm rock solid, but hey, if something did happen to me, you're covered. Peace of mind, all that sort of stuff. So that's what it is. So in terms of the actual product, it covers 5% deposit up to $50,000. So if you have a build over $1 million, the maximum deposit that's covered under the guarantee will be $50,000. And essentially, if works haven't started and the builder goes into liquidation, it'll refund the client their deposit, less the guarantee fee. If the builder's halfway through, quarter through, whatever, and the builder goes into liquidation, we will pay up to 10% of the contract price, up to $250,000 to complete the build. Now, there's a couple of rules around that. So first of all, the client must use a new NZCB builder to complete the build. And we base it on a cost to complete basis. So the example we've actually got in the documentation, the original build was $500,000. Clients paid $200,000 towards it, so still got $300,000 to pay. New builder comes along, assesses it, goes, well, it's going to cost me $350,000 to finish it off. We get the client to sign a new contract with that builder for $350,000, and then we pay the client the $50,000 so that they can finish off the build. So they've still got their $300,000 they haven't paid. We give them the shortfall. They finish off the build with the new builder. To make sure that we're not overexposed in terms of risk, there's a standard payment schedule required for new builds, and there's some rules around payment schedules for renovations. Essentially, what we don't want is a contract that has only a couple of payments of large amounts, because that means we're exposed. So it's lots of smaller payments, although functionally you can group them together. I think the first payment after deposit might be a site works payment, and then the next one is slab down. If you want to lump them together and get them at slab down, that's up to you. You just can't get them in advance. Or you can just invoice as per the schedule. So it might take a little bit of getting used to, but I mean, I think nobody wants Halo to be stretched because it's having to pay out large sums of money, because there will be claims under this product. That's what it's there for. And from a brand perspective, it's a really good thing for NZCB that, because we've been in the media a couple of times where builders have gone to liquidation with builds half completed and we haven't been able to help. With this product, we'll now be able to get a new builder and work through it. So it's a really good thing for NZCB and their clients. Also, we'll require a sub-trade list, just for the fact that we need to know who did the pre-wire, who did the pre-pipe, and who were waiting for a PS4 off and all that sort of stuff. So that we can collate that information, make sure we can get code at the end of the build. Well, the new build thing.
At the contract, yes. At the start.
Yep, because we can't get it out of people when they're in liquidation. It's very hard, and often the clients don't have it, and it's sometimes very hard to find stuff out. We actually had a client, a builder who went to liquidation. It was nearly completed, and they didn't have the producer statement for steel, and it took months and months and months for that client to sort that out. And if they'd just known who it was, it would have been sorted in a day. So, yeah. To make sure there's a bit of brand protection as well, we want, and the board of NZCB has approved this, for the client to acknowledge if they don't want deposit and non-completion cover. So one of the rules I've got there is this can only be taken out if the corresponding 10-year guarantee is taken out. You can't take deposit and non-completion out the 10-year guarantee. So if the client wants a 10-year guarantee but doesn't want deposit and non-completion cover, we just want a short statement from them saying, yep, I've been offered it and I don't want it. And that's so that if that builder goes into liquidation and it hits the press, we can say the client was offered it. They didn't want it. So it's a bit of brand protection for us. The price is going to be 50% of the corresponding guarantee price. So if the guarantee is $800, deposit and non-completion cover will be an extra $400. So pretty simple to work out. Deposit non-completion, for obvious rules, can't be taken out once works commence. So it has to be before. We probably, I would say, between on any month, 5 to 10% of our actual applications are retrospective. And by the way, anyone watching and listening in future, if you're a little bit more organised, you can avoid a $350 fee for a retrospective application. On this product, you can't take it out retrospectively. We've updated our training. So if you haven't completed the Halo training online, I would encourage you to. It's really good. Marcy's done a fantastic job, and her team's done a fantastic job in putting it together. And a couple of members I know have been through it, and they've been very complimentary of it. So we've updated that training with how deposit and non-completion cover works. There's also going to be increased complexity for claims processing and application processing. So we've been working with our team to make sure that we are ready, that we have a new application process and a new claims process, because obviously the claims process for a defect is very, very different from picking up a build halfway through. There's a lot more that needs to be done, placating contractors who realise they're not going to get paid for the start, a client who doesn't know what's going to happen, very different from, I've got a leaky tap, can you fix it for me, sort of thing, or a leaky shower. That's just an example of the standard payment schedule I talked about before. Now, this is for a single story build on a flat site. We also have a 2-story build, but you can amend this. If you have a build that's on a 45-degree slope and you've got extra site works and retaining, well, then of course you're going to have probably a retaining payment and a site works payment, and that's fine. Just put it in there, work it out, and then we will just make sure that we kind of agree with where it sits, because obviously our goal is to not be overexposed. But it could be that 20% of the price is in the earthworks and retaining. I've seen that before, and that's fine. If it reflects what's in your contract and what's on the plans, it's not a problem. Okay, so that's the starting point. If it's a simple build on a flat site, that's kind of what we want to see. But feel free to amend it in line with the actual build.
What about the renovations, which is instead linear?
Yep. So renovations, we just have some rules around the value and the number of payments. I got to put that in here, maybe not. So in other words, like if you've got a $200,000 renovation, and I can't remember the exact rule, but we might require 4 payments, and you put them as per the contract, right? So what we don't want is one payment of $200,000 or one payment of $100,000 and then a second one of $100,000. If it's a million,
essentially want the payments to reflect the progress on site.
Exactly right.
That's
100%.
bones of it.
100%. And the larger the build, the more payments. It might not take any more time, or probably will. Larger renovation. And it's just about keeping the dollar value of those payments down. And again, to reflect what's happened on site. And so it could be over a period of a month, you might charge out 3 payments because lots of things have happened, which is fine. It's reflecting what's happened on site. If that builder goes under, though, we want to make sure that, as you said, the work that has been paid for reflect what's actually happened, and that the remaining amount that they've got to pay kind of generally reflects.
So unfortunately, the builder that's going down, and he knows theirs, could.
Yep.
Yeah.
Correct. So we have
we
have a clause in. Correct. We have a clause in the agreement that says if a client pays ahead of the payment schedule, we don't refund that amount. So in other words, in a renovation, if one of the renovations is to install a new kitchen, and that hasn't been done, but the client's paid the kitchen payment, we would take that out of the calculation because the kitchen's not there. You've paid in advance of the schedule. So
But you pay a deposit on kitchens.
yes, so that would be fine. Yeah, that would be fine because we would have the sub-trade list and you'd have your kitchen supplier on there. 100%. Exactly.
Okay, so the building, so at the moment, the contracts allow for progress claims based on progress, not just on a schedule.
Mhm.
That stays the same.
Yes.
There's no change there.
Correct.
So you're claiming every fortnight for the progress
Yep.
that
100%.
you've been
Yep.
making.
Yes.
And I think just to add to what Sean was saying, it's good practice anyway to try and invoice regularly and invoice smaller amounts because it just limits your exposure and keeps your cash flow going.
Yep.
So I think it's win all round.
It also means if there's a dispute over something, your dispute's over a smaller sum. Yeah. So you're not waiting for I've seen contracts where a roof on payment's 30%.
Yeah.
And then your client disputes something and you're waiting on a 30% payment. Whereas under this, you would have had your frames up, roof framing and roofing. If you're arguing over the roof, you've at least had 16% before that. Okay, so what else? So along with increased complexity, we've hired a new claims and operations manager with residential building and commercial building experience, funnily enough, and quantity surveying skills to really help us in terms of giving us a better competency. And when I talked about before, even understanding when a contract and plans come in with a different payment schedule, to make sure that we've got someone that can actually look at it and go, yes, that makes sense. He's not going to cue us the shit out of it. He's just going to go, yep, I can see what they've done and that makes sense. Tick, on we go. I'd like to say I have those skills, but I probably don't, and I wouldn't want to do it anyway. We've also been in preparation for increased volumes, just making sure that we've got the capacity within the team, reviewing the application processes, and I to say a big thanks to Scott and also Alistair on the marketing team, doing an awesome job helping us getting the change contracts ready, application processes done, and that's all ready for the first, all going well. And also preparing for legislation requirements. There's going to be quite a lot of reporting we're going to need to do to MBIE. We're essentially going from an unregulated industry to a regulated one. At the moment, guarantee companies can be whoever they want. There's no capital requirements. Anyone can start. And that's going to change, which is a great thing, but it also comes with whenever there's regulation, there's compliance. And so I've got no qualms with that. We just have to make sure that our system is capable of extracting the information that they require. So very exciting times for us, lots happening. It's been an extremely busy period for us, but at the same time, it's very exciting, and I think the future's looking really good for